also that talking about retirement can be talking about nightmare, right? It's very hard, depending, but regardless if either it's a dream or nightmare for you, it all depends on you and how prepared are you for those years, right? Sometimes in younger years, we are so caught up in our day-to-day living that we forget that nowadays, one of the biggest challenges that people have is like they are living longer, right? So when it comes to retirement, one of the major concerns is like, what if I outlive my money? And I'm pretty sure our guest speaker are going to talk about it, that people are not afraid of dying. The majority part, they're afraid of outliving their money, right? Also, one of the main challenges is the high rising health costs, right? A lot of people losing their whole retirement money because of health situation, and they're struggling. And another thing that it makes retirement more of like a scary thing to think about is like the pension plans that people have, and they put all their hopes and all their dreams on those pension plans or 401ks or those IRAs or the money that they have in bank. So I'm so happy that today we're gonna specifically talk about that, right? Because June is an annuity awareness month. And if you know or you don't know, annuity is one of the opportunities that you can save and secure your retirement. And today, in recognition of month of June, we want to just focus on this particular solution, that how this solution can bring that security, how in compare of any other type of retirement, this specific solution can bring that safety net or the financial security that everybody in the older years, we all gonna look forward to it, okay? So I'm so happy that today we have one of my very good friends. I went with lunch with this gentleman. It's always so good to have him around in different meetings, in our different seminars and in person and also webinars. He always been so supportive of us because Mr. Rick Gallego is actually, he's the regional vice president with AMS Financial Solution. So who is AMS? AMS is a platinum provider and broker with World Financial Group, right? He has been in the life insurance industry for over 35 years. So he knows everything, right? Including 14 years with Transamerica in Pasadena and Los Angeles offices, which is kind of like a local for us, the ones that living in California, especially in Los Angeles area, right? And currently he holds like 10 years with AMS Financial. Me personally, I work with AMS a lot. They are so far like one of my best experiences working with over 70 different companies. One of my best experiences with always been with AMS. They are so good in their products and services that we provide, not only to the clientele, but also to our agents, like people like me, right? So during his career, he has worked with every life insurance and annuity products you can think of, right? That it's available out there. And he has worked with all distribution channels, including independent brokerages, general agencies, institutionals, IMOs, bank, property and casualty, and most importantly, his cooperation with World Financial Group. So his experience includes comprehensive knowledge of advanced market concepts, such as premium finance, business planning, conservation assessment, easements, retirement design, and the foreign national market. So I know sometimes these words are confusing people that, oh, wow, if they're going to talk about these things, I'm not going to understand anything. This is not for me. No, believe me, the name might sound like a little bit complicated, but the way that Rick explains, you're going to understand every bit of the product that you're going to learn about tonight, right? So Rick lives in San Gabriel, California. He's married with two beautiful children, and his regional territory is in Los Angeles and Orange County as well. And he provides sales and marketing support for life insurance and annuities. And again, as I mentioned, it's so privileged to have him with us tonight because he always been supportive. Not only his technical knowledge and product knowledge is very high, but his sense of humanity, his sense of like caring for people, wanting to help everyone is something that made him like super special for me and for everybody else. So I know that today he has a little bit of technical difficulties. His camera is not working, but again, he's very handsome. I'm going to show you his picture later on, right? But definitely his voice is also so strong. So that's going to be enough for you to stay focused. And also, if you have any questions, please feel free to put in the chat. And later on at the end of the session, we can have a Q&A. Okay? So without further ado, Rick, please take it away.
Renee, hello, I'm here in voice only this time. You know what? Thank you for the wonderful, great introduction. I was with you all the way up until you said he's handsome. And then that's where I said, whoa, but no, yes, it's true. My camera on my laptop is not working. As a matter of fact, I just got the new laptop today. So I still have to set that up, and that takes a while and everything. But so forgive me for that. Last thing I want to do is be rude and not turn my camera on, but it's just broken. With that being said, let me go ahead and share my screen and we can kick things off here. 1 second here. All right. So assuming that you can see my PowerPoint, I am going to go ahead and start and just reintroduce myself just to get my role going. Yes, it's true. My name is Rick Gallego. I'm a regional vice president with AMS Financial Solutions, and we are a platinum provider and broker with WFG. We've been working with you a long time, and I'll touch on that in just a bit. But before I do, I'm sure you all know that, by now you know that AMS is the annuity broker for WFG. We're going to be able to help you with most all of your needs when it comes to annuities. All right. With that being said, I'm going to share a little information about AMS, who we are, and our value offer to WFG. So AMS has been around a while as well. We've been around since 1991. The gentleman up at the top left, Mike Sauce, very nice guy. He started AMS back in Baton Rouge in 1991, and we've been working with WFG for over 27 years. That's a long, strong relationship that we're very proud of. And over those years, I think what the value offer is what we bring to the table for WFG is that we've always provided an A to Z support platform, A to Z. So what does that mean exactly? It means that we're going to help you from the very beginning of your business to the very end of your business. So in other words, we're going to be able to help you learn about the products, help you sell the products, make sure that it gets issued, make sure that you get paid. Because really, at the end of the day, if we can't help you learn about the products, sell it, get it issued, get you paid, then it don't matter much, right? So that is a big part of what we do. So I want to make sure that you are aware that there is a dedicated team to WFG. So when AMS became the annuity broker for WFG, we created a team and so much more. I'll talk a little more about that. But there is a team that's available to you to help you with your business. That team is made up of 3 different levels. So the first level of support is the external support, and that's basically me, right? So I'm the feet on the street, I'm the mouthpiece, I'm the sales and marketing guy. I'm going to help you understand the products. I'm going to help you to with the positioning, the leveraging, the insight, the information to help you with the client conversation and help you recognize the opportunities. There is also another level, which is the internal support. So I have an internal wholesaler, and I always say my internal wholesaler is your internal wholesaler, kind of like mi casa es su casa, right? I'm going to give you his contact information at the end, so always feel free to reach out to him. But then on top of that, on top of my internal wholesaler, there is also the AMS sales desk. So we have a sales desk with over 35 reps that are just waiting to hear from you, whether that be by email or by phone call. And you can reach out to them and ask them anything. You can say, hey, I have a client has this, wants that, what's available? Or you can ask about the products, or you can ask about the features, or you can request illustrations. That's a big part of what the internal support does. We run a lot of illustrations, and I'm proud to say that we turn them around pretty fast. Right now, I believe it's 2 hours or less. I was just I just had a lunch meeting with someone earlier today, and I asked them about that, and they said, "Wow, I get them in 30 minutes." So I like to say 2 hours or less to be conservative. All right. There is also the new business support, the third level, and this is essentially the case manager. So the case managers with AMS are referred to as business relationship managers. And this is the person that when you submit an application, they respond. They reach out and they say, hey, thanks for submitting an application. I'm going to keep you updated with all of the, I'm going to keep you updated with the progress of the case. I'm going to let you know of any additional requirements. This is the person that's going to help you move the money, your client's money, from wherever it's at now to their new annuity and make sure it gets issued and make sure you get paid. So, in the big picture, this just might be your new friend. Say hello. And on top of all this, we created a website. Here it is, wft.amsfsg.com. Now, if somebody tells me, oh, yeah, Rick, I know that website well, then that tells me they're doing annuities because this website has everything that you need to do your annuity business. So if you want to get appointed with any of the carriers that are available, that's there. If you need to do the product training, and you will need to do the product training, that's there. If you want to submit an application, that's there. It's all there. Every last bit, every last detail for every product is available at your fingertips at this website. Also, oh, I guess I don't have that there. Also, there are a lot of videos. There's a lot of videos on this website. There are videos that will take you through illustrations, step by step by step, so you can learn it and explain it to your clients. There are videos to show you how to submit an application, videos on how to use RightBridge. There are videos on the website that it'll give you a tour of the website. So if you haven't done so yet, go check it out, explore, try to break it. There is a lot of information and tools and resources available here. So, as mentioned, I have been in the industry a long time. I should stop counting. But during that time, I've noticed a big mistake that either new agents make or agents that are new to annuities make, and that is that they hesitate to engage with clients about annuities. They hold off, and I'm asked why. Well, why do you think they hold off? Well, I think it's because they feel they don't know enough. They lack the confidence to start the conversation with someone. They think the agent thinks to themselves, well, if I start this conversation, they may say this or they may ask that, and I may say the wrong thing, and then I'll look bad. So then the agent thinks to themselves, you know what? I'm going to hold off from talking to anyone and I'm going to learn more, a lot more, and then I'll become an expert, and then I'll start to talk to you. Don't do that. Don't do that because you know what? If you hold off to talk to someone until you think you're an expert, you'll never talk to anyone. And that's what I want to tell you right now. I want you to remove the burden. I want you to remove the weight off your shoulders that you have to be an upfront expert. You do not. AMS is going to help you become a step-by-step expert. From the moment that you request the illustration to the moment that the contract is issued, we're going to be there with you. So do not hesitate to engage. As a matter of fact, later on in this training, I'm going to give you an example of a conversation that you can have with anyone. All right. So there has been a lot of volatility over the last couple of years. This truly is an unprecedented time, right? This is the volatility in this combination we haven't seen before. And in that landscape, we've seen trouble with banks. There have been some banks that have gone under and that have had trouble. And that's when we get the phone call from our clients. Our clients call and they say, "Hey, Rick, is my money safe in the bank?" And it's important. I want to point this out right here in green. Do you see right here? It says banks provide a service, but you will provide guarantees through contracts called annuities. That's a big difference, and that's a big deal. Banks are happy to take your money, turn around, and make billions of dollars of profit, but you will be able to help your clients navigate this turbulent field with contracts, with guarantees. So that's very important to be able to provide those guarantees in times of volatility. Now, even if this is so, there are a lot of people that are going to say, "Oh, but I'm comfortable with banks," and then they'll ask if they haven't already asked you, "Excuse me, this thing that you're telling me about, is it FDIC insured?" Has anyone ever asked you that? Yeah, it comes up a lot. Um, so I'm going to give you a response that you should say from now on, and I'm not being sarcastic at all. From now on, when someone asks you, "Excuse me, is this FDIC insured?" Your response should be, "Thank God it's not." Because let's
Hi,
take a
Rick.
look.
Rick. Hold on. Hi, this is Odetta King. Um, and thank you so much for doing this. In honor of Annuity Awareness Month, we do have clients, right? We do have clients that are on the Zoom. So I just wanted, I don't know if Ivana had communicated that to you, but we do have clients that are on the Zoom listening to the annuity as well for
Well,
free.
I was not aware of that at all. Yeah. Well, I mean, this is still information that we can use.
Yes, yes.
Okay.
Okay,
So
wait.
so here's the thing. A lot of people, agents or clients, are not aware that FDIC can take up to 10 years to pay you back. I mean, did you know that? Now, here's this. Look at this. The reserves, the balance in reserves for FDIC as of the end of 2022, there was $128 billion in reserve with FDIC. That sounds like a lot of money, right? But not when it's insuring $19.2 trillion dollars. So, I mean, I'm no math whiz. I've never been good at math, but I'm pretty sure that $128 billion dollars cannot insure 19.2 trillion. Maybe that's why, they say that they can take up to 10 years to pay you back. So at this point, you're going to be asked, well, are insurance companies any safer? And the answer to that is yes, because of this acronym. Do you see RBC right here? RBC is an acronym that stands for risk-based capital. And that just means that by law, every insurance company out there has to have at least $2 for every $1 in a business risk. They have to have that $2 liquid in cash reserve for every $1 of business risk. Here's the great thing about WFG. Um, you do not work with companies that have $2 for every $1 of business risk. No, you work with carriers that have 3 to 1 or 4 to 1, 5 to 1, up to $6 in cash reserve for every $1 of business risk. So I would say yes, for my money, just by the virtue of the cold hard cash, uh, insurance companies are safer just because by law you're required to have 2 to 1 RBC. So, these have been, as I said, unprecedented times. There's no expert out there that can take a look at what's happening right now and say, yeah, the last time this happened in 1989, this is what followed. I mean, who knew that wheat, fertilizer, oil, and gas are the four spokes in the wheel of the global economy? I mean, I didn't know that Ukraine was the number one exporter of wheat, and now they're in a war. I didn't know that Russia and Ukraine are some of the top exporters of fertilizer, and now they're in a war, and they can't get that fertilizer out to grow crops the next year. And we know what's happening with oil and gas. So the volatility that we're seeing is pushing a lot of people, not just in the United States, but all over the world, to seek safe harbor for their money. There's potential for war in several areas all over the world. So this is leading to a lot of turbulence. Now, when I start talking about this, some people say, Rick, calm down, simmer down. They tell me, you know what? Don't worry, Rick. The markets will come back. The markets will level. The markets will once again be consistent. That's what the markets do. They're up, they're down, they're up, down, 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 up, down. That's the nature of the beast, Rick. And here's the thing: I do not question the markets. I do not question if the markets will come back. I do not question if we'll see stability once again. My question is, do you have the time to recover? That's the question. If you have your assets exposed to these markets, to this volatility that we're experiencing and will continue to experience, and you are within 10 years of your retirement, I don't think that's a good place to be. Let's take a look at this here. Over to the left, the Great Depression, it took 24 years to recover, right? That's 24 years. The 70s oil crisis took 8 years to recover. The Great Recession or the 2008 financial meltdown, 14 years to recover. So that's the question. Not will the markets come back? They will. But do you have the time to recover from that? So I'm not surprised about this statistic. 60% of senior citizens worry that they'll outlive their savings. Um, that's not surprising, right? But it's sad to know that there are a lot of people out there that are thinking to themselves, I hope I don't live too long because I may not have enough money. Unfortunately, there are a lot of people thinking like that. Uh, and that's why it's important to point out and stress the fact that a fixed index annuity will be able to provide a lifetime income guaranteed for as long as you live, no matter how long you live. And by the way, that's either a level or increasing income guaranteed for life. So think about that. Try to do that yourself. Try to guarantee yourself a lifetime income, level or increasing, guaranteed for as long as you live. That's a full-time job. You would be at your laptop every day, all week, every year, saying, "Oh, I got to buy that, got to sell that, got to move this over." Um, Here with an annuity, you drop in the money, it's set, it's guaranteed. You will receive that income the rest of your life. So this is the golden age of annuities for several different reasons. In our industry, we are shattering sales records for annuities. And the reason for that, right up front, is because there is the
Hi.
market. Hello? The reason for that is because there is the market for it, right? In other words, the baby boomer generation is retiring. Every day this year, there are over 12,000 people turning 65 years of age. 65 years of age is the standard retirement age, right? Now, you can imagine that the majority of those people are retiring at age 65 with some sort of retirement account that they've been putting their money into for the last 20, 25, 30, 35 years, and they're retired now. And they're looking around and they're saying, you know what? This is most, if not all, of my nest egg for retirement. I want to keep it safe, but I want to get a very good return. What could do that? Well, we know that fixed indexed annuities are a fit for that profile. So there is the market, right? But that's not the only reason that this is the golden age of annuities. The annuity of today is so much better than the annuities of just a few years ago. Why?
Yeah.
Uh, If I could ask everyone to please mute, thank you. The
I think he's muted now.
Rick, we cannot hear you. Okay, let me
I got muted.
Oh, I don't know what happened. Somebody's messing up with settings, but go ahead. We have your
All
voice
right.
now.
All right, thank you. So the thing is, the reason that annuities are so much better today is because there is the competition between the companies, right? We see that this market is out there. So the companies are in competition to earn that business. What do they have to do to earn that business? They have to offer bigger bonuses. They have to offer bigger multipliers, better living benefits, better death benefit enhancements. So it's not just a good time to be able to offer clients annuities, but a great time to look at an annuity because the bonuses have never been better, the multipliers have never been better, and the benefits have never been better. Oh, what happened here? There we go. All right. So whenever we look at any financial vehicle, there are two big boxes that need to be checked off. The first box is, will my money be safe? The second box is, will my money make money? And we know that with a fixed indexed annuity, our money is safe. Why? Because it has the 0% floor. In other words, it has a 0% stop loss. In other words, if there is negative volatility in the markets, you do not lose anything past 0%. If the market drops 5%, if it drops 10%, if it drops 40%, you will not incur a loss. Your principal is protected because the floor is 0%. Will you make money? Yes. Why? Because you are indirectly invested in the markets. It is important to point out and stress that you are indirectly invested in the markets because if you are directly invested in the markets, yes, you can capture all of the upswing, but then that comes with all of the downside. It comes with all the potential for loss. So with a fixed index annuity, you are indirectly invested in the markets, and that creates a buffer. It creates a buffer that companies use to provide the protection and guarantees that annuities deliver. So we've been talking about lifetime income. What are some sources for lifetime income? Well, Social Security is a big one, right? We see here over 40% of retirees are going to count on Social Security. But I just read, and I've been reading a bunch of articles. I just read that Social Security will be bankrupt by 2033. And here's the thing, that's not going to happen overnight, right? January 1st, 2033, they're not going to wake up and say, oh, it's bankrupt. No, there will be reductions in Social Security over those years. So maybe we shouldn't rely so much on Social Security. How about pensions? Well, today, only 1 out of 4 retirees still receive a pension, but that's a person today, which means that they started working somewhere 15, 20, 25, 30 years ago to receive that pension. Try to go out right now today and get a job that's going to give you a pension. That is extremely hard to do. Why? Because people are living longer. The reason companies went to 401ks instead of pensions is because people were living longer. And companies were saying, we're not going to keep paying someone until they're 90, 95. So they switched over to 401ks, and now all the risk is on the client. All the risk is on the employee. How about annuities? We've been talking about annuities. This is a way to create your own pension. This is a self-made pension. So again, If you drop the money in, it's guaranteed, it's set, you will receive that income guaranteed for as long as you live. So there's a lot of different markets out there, right? For example, there's something referred to as lazy assets. So lazy assets is essentially money that is underperforming. Um, Examples of this are bank accounts, money markets, IRAs. CDs right now are unusually high, and I say unusually. So that's not going to last very long at all. There is $18.1 trillion out there that is underperforming, or in other words, lazy assets. How about retirement accounts? Um, there is $33.8 trillion in retirement accounts. There are 401ks, 403bs, and we know that with a 401k, there is no ground floor protection. There's no 0% stop loss, right? We saw in the 2008 financial meltdown that a lot of people either lost their retirement or got it derailed. So that is an opportunity to help people secure their income. What about old 401ks? And when I say old 401ks, I really mean forgotten 401ks. Now, you might think to yourself, I would never forget where I left money. But here's a fact. People today are going to have an average of up to 12 different jobs. Yeah. So it's easy to to see that if you're jumping around from job to job to job, and a lot of those, if not all of them, came with a 401k, then it's easy to forget that money. I would say reach out to your friends, families, associates, ask them about their job history and see if those came with 401ks. And then annuities. There is $2.5 trillion in older annuities. And as I said, the annuity of today, so much better than the annuities of yesteryear. So that's an opportunity to help people get out of an underperforming annuity and into the newer annuities. So as you meet with clients, here are some questions to be able to ask, to be able to have a comprehensive picture of what their needs are. Now, one of the first questions would be, where is the money located? This is important because this tells us, the agents, if the money is qualified or non-qualified. So qualified simply meaning that you have not paid taxes on it yet, and non-qualified just simply meaning that you have paid taxes on it. So qualified would be things like 401ks, 403bs. Non-qualified is like bank accounts, money markets, CDs. It's also important to know, is there a surrender charge on that account? Um, this is important because if there is a current annuity out there, for example, and there is a charge to move that money over, it's okay to move that over, but you have to find a new annuity with a premium bonus that will offset that loss. All right. So that's important to know. Some key questions to ask is, what do you intend to use this money for? Accumulation or income? So if someone says accumulation, then the next question should be, how long of a commitment are you comfortable with? 7 or 10 years? If they say income, then the very next question would be, well, how soon do you need to start receiving the money? All right. So the last one here is a very overlooked question. Um, Oftentimes we forget to ask, are you okay with a fee in the annuity? So here's the thing. If you ask 100 people, are you okay with a fee? 100 people are going to say no. So it's important to point out that fees come with value. When you see a fee in an annuity, then that means that you will be receiving a higher participation rate, a higher cap, access to different indices, and other features, living benefits, enhanced death benefit. So if someone says, no, I don't want a fee, that's fine. We have you covered. But, it's important to point out so that they can make an educated decision, that you need to remind them that a fee does bring value. So when we meet with clients, it's important to be able to determine what it is that that they are seeking, their goals. And this is a pretty convenient way to be able to do that. We pull out a pad of paper and pen. Up to the top left, we write accumulation. Over to the top right, we write income. All right. So, as I mentioned before, the key question is, do you need this money for accumulation or income? Now, if the person says accumulation, you have to ask them, well, do you mean you want to accumulate it so that you can take income later? And if they say, yeah, so that's really income. All right. But if they say, no, I just want to grow it as best as possible, then that truly is accumulation. So if they say income, however, then we have some other questions to ask. For example, as I already said, how soon do you need to start receiving the income? Also, it's important to find out um, that how long will you need this income to be received? So, do you need it for the rest of your life? I mean, that's pretty nice, right? To be able to ask someone, "Do you need this income for the rest of your life?" and be able to say, "Okay, we can do that." Also, you may want to ask, do you want control or no control over the growth? Would you rather grow it tax deferred? Because we know that with a fixed indexed annuity, the money grows tax deferred. Also, how safe do you want the money to be? Do you want some of it to be safe or all of it to be safe? Also, would you like to be able to capture the growth in the markets and lock it in and not be able to lose it? So this is important to find out. I mean, and again, we're talking about things that are all available, things that annuities offer. If they say accumulation, then the very next question would be, um, how long of a commitment are you okay with? So would it be 7 or 10 years? Also, do you want control or no? Well, we covered these two questions, but the bottom one is important. So this is a person that has said, I just want to accumulate the money, but then you may want to ask them, would you like to be able to access the funds, to be able to, if there's an emergency or even fund money, and we know that that is a penalty-free withdrawal, which means that even if there is a 7 or 10 year commitment, um, if you needed some money, you could take some money out, typically up to 10% of the account value with no charge at all. So what I'd like to do is share this graph with you. I love this graph because it tells the tale of annuities. So what we have at the bottom is actual market performance from 1999 to 2019. All right, see that? And then um, the orange stepped line is a fixed indexed annuity. All right. And then the blue staticky line, the blue up and down line, that's if you had invested directly into the S&P 500. All right. So I always start off by asking, um, I always start off by saying that a fixed indexed annuity is a lot like climbing up steps, climbing up steps. So let me ask you, how many of you climb steps backwards? Yeah, neither do I. So all a fixed indexed annuity can do is to climb up steps. It cannot climb backwards and lose money. It cannot fall off the steps during a meltdown and lose money. All it can do is climb up the steps. All right, so here we go. Over to the left, we see that not a good time, 1999 for the markets, right? We see that the market is going down, down, down. It's down. What's happening with our annuity? Oh, look at that. We're level. See that? It's important to point out that right now, at this point, we're not making money, but more importantly, we're not losing money. All right. So here we see the markets start coming back up. See that? The markets start coming back up. And that's where we start climbing up the steps. Start climbing up the steps. And as we climb up the steps, we're capturing market performance, locking it in, and not being able to lose it. Now here, this is the 2008 financial meltdown. That is a sharp, nasty drop that derailed a lot of retirements. What's happening with our annuity? Oh, it's level. We're keeping our head down. So, again, we're not making money, but more importantly, we're not losing money. So here we see that the markets start coming back up. See that? The markets come back up, and people that are invested directly in the markets in the S&P 500, when the markets come back up, they get very happy. They get very giddy, and they say, "Oh, the markets are back up. I'm making money. I'm making money." You may want to remind them that they are not making money. They are recovering their losses. There's a big difference between making money and recovering your loss, because let me tell you this, if you're starting down here and you're working your way back up like this, to me, that looks like you're digging yourself out of a hole, not making money. Did we make money with the fixed index annuity? Absolutely. Why? Because we did not lose the money to begin with. That is so important. We didn't lose the money to begin with. We are not wasting our time and money with recovery projects. So yes, we made money in the fixed index annuity because we will not lose money during the downtime, and then on the up times, we're going to be able to capture that market performance. So I'm going to wrap up with some overviews on some of the products out there. For example, there is F&G Accelerator Plus. Now, F&G is a carrier. The F&G stands for Fidelity and Guarantee, right? And this is just some general information. F&G offers flexible premium products, flexible premium. Now, the majority of annuities in the industry are single payment. They're lump sum. But F&G says, well, you can keep paying into it however long you want. So we see here that it is a $10,000 minimum to start, and there's no payment schedule. There's no payment schedule. You can pay into it extra whenever you want, but when you do, it has to be a minimum $2,000. All right. So again, there's no schedule. You can pay in whatever you want, as long as it's at least $2,000 whenever you want. And it's 10,000 to begin with. Now, this has a great impairment multiplier. An impairment multiplier is a feature on an annuity that is essentially a disability rider. So if the annuitant cannot perform 2 out of the 6 activities of daily living, then they will receive double the income that they would have received. That's pretty nice, right? No charge, no fee. There is also the Nationwide New Heights. This is a product for income. This is specifically for income. We see here that the minimum premium is $25,000. And that's, well, we see here that for the first 10 years, you're guaranteed a minimum 8% compound interest. So every year you are rolling up at 8% compound interest. But look at this. The year one, day one, you get a 30% income bonus. So whatever you put in, let's say you drop in 100,000, that same day, that 100,000 becomes $130,000. And then that 130,000 is guaranteed a minimum 8% compound interest growth over the next 10 years. Also, there are products for long-term care. So Global Atlantic has the 4Care product, and this is all about long-term care. The minimum premium in California is $40,000. It does accept non-qualified money only. So think about like cash, right? Money in a bank account, money market, so on. So if the client can answer no to 8 health questions, then whatever they put in, they receive triple the amount. That's pretty nice, right? So if they cannot answer no to all 8 questions, but they can answer no to the first 4 questions, they receive double the amount. So this would be either triple or double the amount. And a great feature about this is that it does not require a medical exam. And if this is never used for long-term care, it's still an annuity and has been growing like an annuity. It's important to know that the majority of long-term care products out there, if you do not use the money in that product for long-term care, then you lose the money. Here, if you do not use it for long-term care, it's still an annuity and you're able to access that cash value. So I'm going to wrap up. And for the agents on the call, I'm going to share this contact information. Seth Thompson is my internal wholesaler. I mentioned him before. Always feel free to reach out to him and ask him about any questions that you would have asked of me. Here are a couple of great direct lines to AMS and my contact information. Always feel free to reach out to me and let me know how AMS can help you. So, Vinay, I'm gonna hand it back to you.
Yes, thank you so much, Rick. Thank you. Appreciate all the great information that you put. You know, there are a few pointers that it really stood out to me, and I want to just go over it one more time. Like, first one, you have different options when it comes to retirement. There are some options that they are tied to stock market. There are some options that you can put your money in the bank only, which Rick talked about, like that FDIC situation, and people are so counting on that FDIC, not really knowing what that provides, right? Or your third option is basically going with insurance products, which is literally your money is insured. Because as Rick said, there's a huge difference between growing money or recovering from loss. So when it comes to our retirement, we can choose whether put our money still in 401ks or IRAs, right, which is tied to stock market and we have a chance to lose it, or we can put it in the bank accounts, which basically we are not receiving any type of interest on our money. So with considering inflation, like rising health costs and stuff, the chances that we're gonna outlive our money is much higher. And the third option, when you got that good of the both worlds, right? You get safety from banks, right? Quote unquote, the safety that you're not losing money to stock market. But at the same time, if you want to see your money growing, then index annuities are providing the combination of these two, the good of both worlds. Am I right, Rick?
Oh yeah, absolutely. You're preaching to the choir here.
Awesome. Awesome. So yeah, if we can save our money from the beginning from market loss and all we get is gonna be growth and our money gonna always go towards the positive side of the market, why not, right? Never losing money, guarantee of no loss, and all your money is doing is just growing or keeping the principal. So thank you so much, Rick, for all the great information. That was like couple of my pointers that it really stood out to me, and I wanted to review it one more time. So I
Can
want
we
to
ask him a
open up to
question?
our
Can we
participants.
ask him a question, please? Can I ask him a question before he leaves?
No, that's exactly what I was going to do, Virginia. Going to do.
Okay.
I want to open up the stage for any questions that any one of you might have from Rick or myself. So Virginia, I'm gonna go first with Virginia's question. She's asking that for the new heights, will the promotion continue till December 2024? What promotion you're
Because he says something about 30% bonus, 8%, and I don't know whether it's going to be continuous. I saw that on the screen. The reason I'm asking is because I have a client that is in a very bad annuity right now. She has had that, rolled over for some reason. They had a need to roll it over after the first 7 years. So it's been there for 14 years. She put in 20,000, only made 3,000 so far. She was very upset and she was wondering whether she would take it out first. And if she takes it out, they say she'll pay penalty. So she was trying to see if she could wait till December to for example, to move it to this type, new heights. Because he said that new heights is like at 25,000, which he should be able to do to get better bonus of 30% and 8% daily. That's why I was asking him if it's a promotion or is it a continuous thing.
So we really never know, if or when companies are going to change the bonus rates, the cap rates, the participation rates. Um, and as you imagine, they don't want to let you know too far ahead of time, because then people will concentrate on just that product and there'll be an imbalance of sales. So we don't know, but let me put it this way: it's not a program or an offer. That's just the way the product is. So, it will continue indefinitely. I mean, it's already been going on for a while. And I will also say this, the Fed, it seemed like the Fed was going to make some reductions in the rate this year, and that was going to lead to lower annuity rates, but they did not. So it's helpful as long as the Fed does not reduce the rate, that there's a even better chance that will continue. But the short answer is I couldn't really say.
Mhm. Thank you, Rick. And you know what, Virginia, now I'm not sure what your client wants to do with her money, right? Sometimes we see big numbers and we get excited to move our money to those type of products, but at the same time, you need to be very aware of what is the goal of your money, because even we have here, I'm not sure if any of our guests they want to share or they want to give their feedbacks, but not everybody has the same goal when it comes to their money, right? Some of them, as Rick mentioned, there are different annuities out there. Some of them they are focused on growth and accumulation. Some of them they are for lifetime income, not outliving. Those are like Nationwide New Heights is the best one for somebody who wants lifetime income, but might not be the best product for somebody who wants the growth and accumulation, right? So that's why the great thing about like dealing with people like us, with us as educators and brokers, is that we are not limited to one product. So whoever sits down with us, they can trust, because we have access to so many product and providers, because we have access, great support like Rick and many other professionals. We will make sure the products that we are offering, our professionals are offering to the clients, are specifically designed for their own needs. Okay. So just by numbers, don't choose a product. It's very important that what's the goal and what's the purpose of that plan. Very good. So I think we are off for time, but I want to open it for another couple of people, maybe one of our guests or one of the professionals. If you have any questions, this is the time to ask. Stage is yours. No, no one. I think Rick, you
Can I
explained.
ask one more question? Can I ask one more question for the same client?
Sure.
Because this has been there for 14 years, as I told you. She just was concerned the fact that they didn't put much money, meaning they have high management fees for this particular one she's in, and they rolled it over one time without her permission, making it 14 years. So in this situation, she wasn't really like saying, "Oh, I want a particular product," because she doesn't know any better. So in my mind, it's like this particular a new heights one with the 8% daily and with the 30% bonus. I'm also believing, or if I'm wrong, correct me. It is the type that they can take money from before I think it's a 10-year thing, but they can take money from there before the time lapses. Is that true or not? This particular new heights?
Well, I will highly recommend you
Also for
to
new
sit
hires.
down with whoever is training you because they need to go and look into the papers. Okay, that's a very specific question, but definitely with annuities, of course, you have a free withdrawal with all the annuities that every single year you can take the money out. Again, depending on what the person needs are, you should choose the annuity, right? It's very important. But Rick, another thing that Virginia mentioned, and I want you to kind of cover it for a minute or so, the fees, right? Because a
Sure.
lot of people, one of the biggest myths when it comes to annuities is that a lot of people think that annuities have so much fees and charges and hidden things that it's eating their money. Can you cover that part a little bit?
Absolutely, yeah. Well, so here's the thing. There are absolutely two options when it comes to fees. If you don't want any, that's fine. There are a lot of annuities with absolutely no fees. But it shouldn't just be a decision of, well, I don't want to pay a fee, so I just want something with no fees. You should be aware that when a fee is a part of the product, it does bring substantial value. With a fee, you're able to get higher participation rates, higher caps, you get living benefits, you get enhanced death benefits, different multipliers. I mean, there's a lot that fees bring to the table. But at the end of the day, if the person says, no, I'm allergic to the word fee, then that's fine. There are plenty of options with no fees at all.
So basically, annuities in general, they don't have any fees. But if you want to add like different benefits to your annuity, they might come with the fees, like the I don't know, income rider or sometimes the long-term care rider. But annuities itself, they don't have fees, right?
Right? I mean, so that's
Mhm.
like anything else,
Like
right?
index annuities in particular, we are not talking about variable ones.
Sure, yeah. And like anything else, if you want the extra, then you can add that on, but of course there's going to be a cost, but it is an extra. So, yeah, it's important to know that. But I'm going to say this. I mean, there are even some options where there are income riders and death benefit enhancements that still have no fees.
Mhm.
So, for
Yeah.
example, the Athene Agility, no fees at all, and that is an income product and has an enhanced death benefit, no
Sure.
fees.
Yeah, perfect. I see Cheryl is unmuted. Cheryl, do you have a question?
Yes, I do.
Mhm.
Talking about the annuity, right? So you're talking about fees and no fees, right?
Right.
So
Mhm.
my question is, okay, like if um you take out the annuity for like say $50,000, right? Um, about what is the average fee would you pay on that?
Well, so you're asking what is the typical fee? Uh,
Yes, if you do have to pay a fee, if you want it with a fee, because you said it's benefits to us to have it with a fee, right? Because it make more money, right? You get more benefits, right?
right, right.
Okay, so like average, what would the fee be like? You don't have to give me like ballpark figure, but just like around about, you know.
So I'll say this. I've seen that probably the fee that comes up most often is 0.95% less, just slightly less than 1%. You see fees that are 0.95%. And again, those are fees for higher participation rates, caps, income riders. There may be some that are less, there may be some that are more, but for the most part, I have seen that the typical fee amount is 0.95.
Okay, thank you.
Oh, you're
Yeah.
welcome.
And Rick, we have another question here. One of the participants asked, how can you reduce the amount of tax you pay on the tax deferred annuities upon withdrawals?
How can you reduce your taxes?
Yeah,
Well,
I
you
think
you,
that.
you don't. So here's the thing with a fixed index annuity. Um, let's say that the money that you put in is from a qualified account, like a 401k or a 403b. Well, that means that you have not paid taxes on that money yet because it's been taken out of your paycheck, right? It's been deferred. You haven't paid taxes on it. So if you fund an annuity with qualified money, you have not paid taxes on that yet. And then over the years, as the money grows, you haven't paid taxes on that either. So you would be taxed at your current income tax bracket at the time that you start taking the money out. But that's a big advantage because there's a lot of other options where you get taxed every year of growth, right? The CDs. CDs are enjoying higher rates right now, and people are looking more at CDs. But here's the problem. If you get into a 5-year CD, you get taxed on the growth every year. With a fixed indexed annuity, you do not get taxed until you actually start to receive that money in hand. So another scenario is if you were to fund an annuity with non-qualified money. Let's say you have money sitting in the bank. You've already paid taxes on it. So let's say you have 300,000 in the bank and you fund an annuity. And over the years, you make 100,000 of earnings of interest. So now you have 400,000. Well, you would only pay taxes on the earnings because the 300,000 that you paid into it, you've already paid taxes, right? You're not going to get taxed twice. So in that scenario, you would only get taxed on the earnings. But there's no way to do tax breaks or tax savings with an annuity. It's tax deferred.
Yeah, you need to find alternate way to deduct from your taxes, but through
Yeah.
annuity, you cannot do that. And also you mentioned something about, you're welcome. And you mentioned something about CDs that every year you get a tax because they are part of tax now categories, right? So every single year, whatever gain you have, you gotta pay tax on that part. I think one of the main difference between CDs and annuities, because it's very popular, right? Especially in last month or so, I've been like seeing clients and literally they are comparing, oh, we have our money in the CD or we are thinking about putting our money in the CD. So the one of the main differences between annuity and CDs, and Rick, correct me if I'm wrong, in CD, if you have your money for 2 years or 3 years or 5 years contract, you cannot touch that money. If you touch it, they're not going to give you the interest that you gained on the money. But in annuities, typically, in majority of time, every single, regardless of how long your contract is, with majority of annuities, every single year, you have 10% penalty-free access to your money. So it's not 100% locked. So in the case of emergency or anything, at least you know you have access to the 10% of it without jeopardizing your interest and growth and everything. Am I right, Rick?
That's absolutely correct. Penalty-free withdrawals are available on all annuities. As you said, typically up to 10% of the account value, typically starting in year one.
Okay. Well, thank you. I like this Q&A session. It's going really well, and I think everybody asking very good questions. So I know that it's 5:44. We went a little bit over time. Does anyone, I don't want to keep Rick more than this. I promised him that in an hour, like this is for an hour,
That's
but
fine.
last chance. Does anyone has any questions that they want to like ask Rick, or they have any thoughts on annuities or anything that we covered today? Going once.
I have a question. Hi, Rick. Can
Hi.
you expand on enhanced debt benefit, and why would someone take an enhanced debt benefit? What is that, and why would someone take it?
Well, oftentimes, I shouldn't say oftentimes, but sometimes there will be someone that is uninsurable. They cannot get life insurance because of a condition, or because of their health. It's highly rated, so it's too expensive to get life insurance. So as an alternative, annuities, some annuities have enhanced death benefits. So this allows the client an opportunity to be able to leave not just the cash value behind, but a leveraged amount of the cash value. So typically, an enhanced death benefit works this way. You drop in the premium. Let's say you pay in 300,000 into an annuity, and you opt for the enhanced death benefit. So the way an enhanced death benefit works is that at the time of the death of the annuitant, what the company does is they double the interest earned and pay that along with the original premium. So let's say you put in 300,000 and you opt for the enhanced death benefit. And then 10 years down the line, you have made 100,000, or let's say 150,000. You put in 300,000 and you make 150,000 in 10 years. So if that person passes away, then they take that 150,000, they double it. So that now that's 300,000, and they pay that along with the original premium. So instead of leaving 450,000, they leave behind 600,000.
Mm, very good.
Did that make sense?
Yes, I think that was a very good and the simplest and the best way to answer the question Odetta asked. Okay, so for sure, nobody else, no one else. I just want to make sure this is your last chance, right? Going once, going twice. I'm counting faster this time. Going once, going twice, and okay, sold out. Well, thank you so much. First of all, I want to thank Rick. Rick, thank you so much that just like always, you did a great presentation and you delivered all the information in a perfect way. Thank you so much. It was very informative. I'm pretty sure for all the agents and professionals on the line, and also for our respectful guests. So, and also I want to thank all of our guests being on the call. Please reach out to whoever invited you, and you can do a one-on-one session with them. You can ask them to give you a personalized scenario for have a better understanding about what is your option when it comes to annuities and how it's gonna benefit to your retirement, whether it's the main retirement plan or it's going to be a supplemental retirement plan. So whoever has old 401ks, even if they are young, but they're not working with their previous employer and they have their old 401k sitting somewhere, they have IRAs, they have TSP, they are already retired, they have pension plans, they have money sitting in the bag, they have money in the mattress not doing anything. All those people are great candidates to talk about annuities, because again, is one of the safest places that you can have your money, because there is a guarantee of no loss. If market goes down, you're not going to lose money. If market goes up, well, good for all of us. We're going to all make money in our plans, right? So again, set a time with whoever invited you, get more detailed information, and we're going to do our best to provide you all the information you need. And if you decide to move forward, definitely we're going to use AMS to help us to offer the best plan possible. With that said, have a good night, everyone. It was very good to spend some time together, and we'll see you. Oh,